morning, everyone. Thank you so much for joining us today. We will have some FSA experts and some tax experts to go through the Emergency Relief Program for 2022. During this session, you will have the opportunity to enter your questions into the Q&A box, and we will do the best we can to answer as many of those as possible during this session. Anything that is outstanding, we will follow up with you. This session will cover the overview of the program and then go into detail on where to find the information to complete the actual forms. I'm going to turn this over now to FSA employee and ERP expert, Sydney Griffin, to get us started.
Good morning, everybody. Thank you for joining us today. As Janet said, I'm Sydney Griffin, and I would also be delighted to introduce a few members of our ERP team. We have Aaron Blackburn and Melanie Sullivan.
Hello.
So thank you guys for turning your cameras on real quick. And like Janet said, we'll all try to answer as many questions as possible by the end of the call and follow up with you on email for those that we can't get to before the end. But just to give you a little background, we're a diverse group of FSA employees. We have members from county, state, and national office present today and ready to help tackle the presentation and give you a high-level introduction of ERP 2022 before we hand it over to our USDA staff experts to provide their advanced tax and accounting knowledge for the Track 2 tax option. So Aaron, can you help me and pull up the slides for us? And we'll go ahead and get started. Okay.
Can you see them?
No, I don't, but it could just be my screen. So the overview for ERP is on December 29th of 2022, President Biden signed into law the Disaster Relief Supplemental Appropriations Act, which included more than $3 billion in assistance to agricultural producers that were impacted by the wildfires, qualifying droughts, hurricanes, winter storms, and other eligible disasters that were experienced during the calendar year 2022. So all of our eligible impacted producers can apply for financial assistance through what we have been talking about today, the ERP 2022 program. So this program is going to help offset the financial impacts of crop yield and value losses from qualifying disasters that occurred during that calendar year. And on our next slide, so ERP, I'm sorry.
Yeah, go ahead, Sid. Sorry, go ahead.
ERP 2022 program benefits are delivered to eligible producers through a two-track process. And this two-track approach is what enables USDA to streamline the application process and help reduce the burden on producers so that we can proactively include our underserved producers who've been left out in past relief efforts and encourage participation in existing risk management tools that can help producers handle future extreme weather events. So it's important to note that disaster impacted producers may be eligible for ERP 2022 assistance under one or both tracks. And I know today we'll be talking about track 2, but we just wanted to make sure you are aware. So producers can receive assistance under one or both, and to avoid any duplication of benefits, if a producer is able to apply for both tracks, then your track 2 payment calculation is going to take into consideration any payments that were received through track 1. And the sign up for this program began in October 31st of 2023. And on our next slide, we'll talk about track 1. So track 1 is intended to expedite assistance to producers who receive crop insurance indemnities or a NAP payment using a more streamlined application approach. So we're using data that's already on file with RMA and FSA through producers' participation with crop insurance or NAP. to help pay for qualifying crop production and tree losses. And the Track 1 process, pre-filled application forms or an FSA 523 is going to be mailed to producers that received a NAP payment or a crop insurance indemnity for certain crop insurance policies. So if you are a producer and you received this FSA 523 in a letter in the mail, receipt of the application is not necessarily confirmation of eligibility, but because you experienced these losses during the calendar year 2022, you are eligible to apply if you had a qualifying disaster event. And some of our quality losses may be included in the Track 1 payments if your crop insurance indemnity or your NAP payment was already adjusted for quality. So if you need additional information about the Track 1 provisions and the payment calculations, all this information is available at your local USDA service center. Okay, so Track 2 for our next slide. Track 2 is targeting the gaps in emergency relief assistance for eligible producers whose losses were not already covered by crop insurance or NAP in our Track 1 that we just discussed. So some of these losses may be revenue losses that were, maybe they were too small. You had a shallow loss and it wasn't covered by your crop insurance or NAP in Track 1. So we're going to use a revenue-based approach to assist these eligible producers who suffered a decrease in disaster year revenue as a result of this qualifying calendar year 2022 disaster event as compared to a benchmark year. And so with this program, or this track, I apologize, with this track, there are no pre-filled applications that are sent by mail. So producers are going to use a traditional application process and apply using the form FSA 524 and the form FSA 525 and return those back to their recording county office or to their local service center for further processing. And Track 2 also grants producers the flexibility to use either a tax year option, which we'll talk about much later in the presentation, or an expected revenue option for determining revenue for benchmark and disaster years. So in cases where revenue doesn't reasonably reflect a normal year's revenue, Track 2 is giving an alternative method for establishing that revenue. So likewise, Track 2 can afford producers of crops that are used within an operation and don't generate revenue. For example, crops that are grown and fed directly to livestock. So you don't generate revenue from the sale of that crop. So there is an alternative method for establishing that revenue for the purpose of applying for ERP 2022 benefits. And again, if you have any additional questions on how to apply for Track 2 or which of these two options may be best for your farming operation, please feel free to contact your local USDA service center. You'll see I'll give you a couple of plugs for that, but we'll also provide some resources at the end of this call if you want to go online and review that. Okay, so who can apply for ERP 2022? And on our next slide, you'll see some qualifications for eligible producers for ERP 2022. And eligible producer is an individual or legal entity that's entitled to a share and is at risk in the eligible crop, or that would have shared had that eligible crop been produced. And is any of the following listed on the slide? If you're a citizen of the United States, a resident alien, which for the purposes of ERP 2022 means a lawful alien, which is defined in 7 CFR Part 1400, or a partnership organized under state law, corporation, a limited liability company, or other organizational structure organized under state law, Indian tribe or tribal organization as defined by the Indian Self-Determination and Education Assistance Act, or a foreign person or foreign entity who meets all requirements as described in 7 CFR Part 1400. And on our next slide, some of the qualifying disaster events. There are specific disaster events that Congress allocated funding for this program. A qualifying disaster event would include qualifying drought, derecho, excessive heat, excessive moisture, flooding, freeze, including the polar vortex, hurricanes, smoke exposure, tornado, wildfire, and winter storm. And our next slide, we just want to point out here that we use the word qualifying drought. And for a qualifying drought, ERP 22 assistance is available in any area within the county in which the loss occurred and was rated by the U.S. Drought Monitor as having a drought intensity level of D2, which is severe drought, for 8 consecutive weeks, or D3, which is extreme drought, or higher level of drought intensity. So just in case you're wondering, you had any questions, if you were in a county, a list of eligible counties for ERP 2022 qualifying drought is available on our website. And we've included the link on the slide, and we'll have that link at the end of the presentation if you need that. All right, so some related conditions on our next slide. ERP 2022 related conditions are damaging weather and adverse natural occurrences that occurred concurrently with and as a direct result of these specified qualifying disaster events that we just discussed. So excessive wind that occurred as a direct result of a derecho, or silt and debris that occurred as a direct result of flooding. Excessive wind, storm surges, tropical storms, and tropical depressions that occurred as a direct result of a hurricane. And also excessive wind and blizzards that occurred as a direct result of a winter storm. So all of these are qualifying disaster events and related conditions that are covered by ERP 2022. On our next slide, we talk about the eligible crops. And so eligible crops include any crops that were produced or would have been produced if not for the qualifying disaster. So for example, you may have some crops that were prevented from being planted. Those are also included. In track 1, we use some terms specialty and non-specialty crops, and we'll go over that, and also specialty high value and other crops. You'll see that when we go over the payment limitations a little bit later in our presentation. But if you're having questions determining whether or not your crop is eligible, on our next slide, we talk about what is ineligible, and maybe that'll help you draw some conclusions. If not, just feel free to reach out to your service center. But ineligible crops for ERP 2022 are crops that are, for example, aquatic species that are not considered aquaculture, animals and byproducts, crops intended for grazing, timber, cannabis sativa L, and any part of the plant that does not meet the definition of hemp, and banana plants. These are our list of ineligible crops for ERP 2022. On our next slide, when we were talking about the specialty and high value crops or non-specialty and other crops for each track, the definition for those categories are the same that were in our previous ERP program, except for one change, and that's to our specialty crops. So specialty crops, just for your information, are fruits, vegetables, tree nuts, herbs and spices, medicinal plants, nursery, floriculture, and horticulture crops. So our specialty crops include common specialty crops identified by the Agricultural Marketing Service, or AMS, and a list of those specialty crops can be accessed in a link at the end of the slide. So if you have a specialty and high value crop, there's a $125,000 payment limitation, as well as if you have a non-specialty or other crops, you have a $125,000 payment limitation. So there's a separate limitation for each of these categories. And this applies to program year 2022 for both tracks 1 and track 2 combined. So on our next slide, there is an optional increase that's available for collectively to the specialty and these high value crops with the separate payment limitation for the non-specialty and other crop if you meet a certain criteria. So if at least 75% of your or the legal entity's average AGI is derived from farming, ranching, and forestry operations, and you complete the FSA 510 requesting the optional payment limitation, then the optional payment limitation for the specialty high value would be 900,000, and the payment limitation for non-specialty and other crops would be increased to 250,000. And one key point is that if you meet the criteria, then you have to request this optional increase in payment limitation using this FSA 510. So it's not automatic. On our next slide, coverage requirements for future insurance coverage requirements. Participants must obtain crop insurance or NAP coverage where crop insurance is not available for the next 2 crop years. So this is determined from the date that the producer receives an ERP payment. And of course, it varies, depends on the timing and availability of crop insurance or NAP for a producer's particular crops. So the final crop year to purchase crop insurance or NAP coverage to meet a second year of coverage for this requirement is the 2027 crop year. So if you receive an ERP 2022 payment, you're required to you agree and you're required to obtain this future insurance coverage for the next 2 available crop years. So for crops where there's no insurance policy available and ERP recipients are ineligible for NAP payments, perhaps it's because you have exceeded an AGI limitation, then you may meet the requirement by either purchasing whole farm revenue protection or microfarm if eligible, or obtaining a NAP coverage and paying the applicable NAP service fee required, regardless of your ineligibility to receive that payment. So if the crop is not eligible for NAP, then producers are required to purchase the whole farm revenue protection or microfarm crop insurance at a coverage level of at least 60%. And on our next slide, as noted earlier, Track 2 uses a revenue-based approach to compensate for losses. So although producers have the flexibility to either use a tax year option or an expected revenue option for determining their revenue for the benchmark and disaster years, the upcoming presentation will focus primarily on the tax year option. So we do recommend that you contact your local USDA service center and learn which of these options is best suited for your operation, or you can access the additional resources provided on the following slide. And Erin, I think, yes, we should have a QR code and a link available for you right there. So right now we're going to turn it over to our experts, to Guido and Hobbs. I appreciate your time. Thank you.
Okay, Janet, can we see the slides?
Yes, we can.
All right, JC.
Thanks, Guido. So we're going to be talking about the tax issues and that as it applies to the application for the 2022 Track 2 benefits. This slide just kind of tells us a little bit about who the main players in this material was. Ruby Ward, she is the coordinator of the project out of Utah State. Guido and I are tax people. I met with Oklahoma State University, and Guido was retired from the North Carolina State. So gives a little bit of who we are. Next slide, sir. Guido's going to be advancing the slides. So as we look at this, here's our website. It's hosted by Utah State University, and it's managed by the National Farm Income Tax Committee, Extension Committee. And we are the folks that work on updating, correcting, modifying, et cetera, with the Farmer's Tax Guide. And there's about 20 of us that meet annually to go through that. And we work directly with IRS on that project. And then we also do a lot of work collectively for Utah State's website, the Rural Tax Organization, ruraltax.org, putting together tax material, fact sheets, short recordings, short webinars, presentations, etc. And here's a list of the topics that have been covered in the past. We do a lot with weather losses, disasters, hobby issues, self-employment, etc. So there's a wide variety of tax topics on the ruraltax.org website, which can be accessed through that QR code. Next slide, sir. Here's acknowledging that USDA provided us funding under an agreement number to do tax education. Now, keep in mind our education, our opinions, findings, conclusions are based upon our findings and do not necessarily reflect the views of USDA. And we do our best to follow IRS guidelines, IRS information, the tax code, etc., in making our presentations and developing the materials. And again, we do not discriminate based upon race, color, religion, etc. So our goal is to provide accurate income tax information to help farmers and ranchers with determining or working through tax issues. Next slide, sir. So here's the topics that we're going to be covering today. Now, Guido and I are breaking this apart so you don't have to listen to one of us for the whole thing. So the first four bullets, which is where farm income is located in tax information, we're going to give you a quick overview of the Schedule F and where you're going to need to go to extract separate income details, because Schedule F does not necessarily have all the pieces there. And it's also necessary to remember USDA's rules for farm income and IRS rules for farm income do not necessarily mean the same things. And we'll explain some of those in the pieces. We're going to introduce the FSA forms 524, 524A, and then the 524B for the Track 2 program. Give you a quick overview of the 510. Then we put together an example, and Gita's going to go through these next four. We've got an example that we fill in the blanks of the 524 and the 524A, sections A and B, providing links to other resources that can be used to help make sure that we accurately input the information. We'll have a discussion time there and then questions and answers for you as well at the end of the presentation. Next slide. So our goal is here to make this as useful to you as possible. Like I said, not all farm income is on Schedule F. You're going to have to look to other places. So the key ingredients in this thing, the key information that you really want to pay attention to is in that blue box. You've got to have clear communication between the tax operator or the farm operator and tax professional to determine what goes into these pieces. And you cannot ever get a complete picture of the farm just from the tax return. You're going to have to delve deeper. Communication with your preparer, records, etc. are going to be needed. And so when you look at this, the blue box clarifies, but remember, 98% of our farm returns are filed using cash accounting, and we're going to be touching on that to the largest extent. We will give a little bit of a presentation of where to find things if you use the accrual-based accounting. Reported on Schedule F, that's the form for farming activities, income and expenses for the farm. The Form 4797 shows sales of breeding and livestock, machinery and equipment. These are farm assets used in production. The Track 2 or the ERP 2022 does not use this, but you have to remember there are certain pieces on that we need to be aware of. But for the most part, this is not used in this presentation. Also, Schedule C, value-added products that do sometimes occur. In your examples in the material provided by USDA in their fact sheet, talks about strawberries produced into jam. That's a value-added product. You've increased the value from the farm basic production, which is the strawberry itself. We take it through a process. We turn it into jam. It becomes a value-added piece. Also, ag tourism shows up on Schedule C. Now, this is not necessarily farming. It's farming people. Bringing people onto the farm to see how things operate, what's being produced, etc. There's a supplemental document that we put together, and we'll point out this information later on. But basically, we're trying to help you determine income sources. And remember that everything that we talk about here is not an all-inclusive list. We do our best, but it's not all-inclusive. Next, sir. So there's always additional information that's needed. So sources of that, we've got the materials on ruraltax.org. There's a lot of tax topics, fact sheets that you can look at, links to other materials there as well. So a lot of times the fact sheets will point you to additional discussion. There's also information on farmers.gov under the taxes area. These are webinar recordings, other links to materials. Our land grant universities, such as Oklahoma State, Kansas State, there's a lot of these. Their extension services provide fact sheets and information. Go to those websites, to those universities, their links, and you will be able to find additional topics. Google search, Dr. Google does very well at helping you find some of that information. Also, IRS publication 225, the Farmer's Tax Guide, a great source of information as well. So with those, that's where you can find additional information on where farm income is located on the tax returns and what it means. Next, sir. So the Schedule F versus the Schedule C. Both of these forms report business income and expenses. Now the Schedule F, that's the farm side, and it looks at the first sellable point of the product, and that's pointed to on Schedule F. In other words, it's sold in its original state. The strawberries are further turned into jam. Now, there are certain times that we have items that are so small in terms of the amount of income being generated that it's often reported on Schedule F instead of on Schedule C. These are de minimis items. Now, it's kind of hard to figure all these pieces out. Tax return preparers use their best judgment to determine whether or not it should be on Schedule C versus on Schedule F. But this does occur, so you're going to have to look at what's going on. So when we have a large amount of strawberries produced into strawberry jam, then it's going to show up on Schedule C. So we're going to remove the first sellable point from the farm to being the first sellable point as another business form. So it's reported on Schedule C, and the expenses of raising the strawberries are on F. The expenses of processing the strawberries into jam reported on Schedule C. Same thing would be with wine. Grapes would be on F. Wine, grape juice would be on C. Ag tourism activities are also on Schedule C. So where do the value of these products that are grown by the farmer and used in value added go? Well, remember, like I said up front, it's the value of the first sellable point goes on F. Anything beyond that has to go to C. And it is reported as income on F for the strawberries that go into jam. There's not a sound black and white of value for those strawberries. Usually it's a reasonable value. That could be the cost of production for valuing that on the F, and then that becomes your cost on Schedule C. You're going to have documentation to point to and make sure that those values are reported accurately and correctly. One thing to keep in mind, again, as we look at tax preparers nationwide, different levels of expertise, depending upon what the farmer is doing and what's going on, we may need to look further than just what's reported on the return and look to the records of the farm, ask more questions before we make that determination of where it goes. So these value-added items like cheese, juice, wines, etc., need to be looked at more closely to determine where we're at. Next, sir. Now, how do we use tax information for the 2022 or ERP 2022 application? Here's what we're needing. We're going to basically start with Schedule F in the farm records. Then we're going to work through the FSA forms 524 on track 2, the 524A, and if needed, we get to the FSA 510. Again, we're focusing on track 2 in our discussion. So the examples to calculate those values, there's a worksheet. There's also a a good tool that's on the website that helps you fill out the forms. And we're going to use an example to calculate those input values for those forms. And we're not going to be using the tool, showing the tool itself. We're going to be talking through the application forms for the 524A and FSA 524 application. And Will Farmer is our farm example that we're going to use. And we'll get into that in more detail here in a moment. Next, sir. So there's additional information that we need. Now, remember what was talked about in our first portion of today's discussion. An individual can apply for track 1 and track 2. But if you get track 1 amounts, then you're going to have to subtract those from the track 2 payment accordingly, because it's going to reduce those. The tool that I was talking about, the ERP 2022 tool, spreadsheet for completing the application and making the calculations, is found on the website. Start there. It makes life easy or easier. It walks through the process, asks the right questions. It will help you fill out the forms correctly, the applications correctly. Next, sir. So we look at the Schedule F. We're dealing with, and here on the right-hand side of the screen is the front page of the Schedule F, which is the Form 1040, on the Form 1040. It's profit and loss from farming. The top 9 lines, or really the top 8 lines, are the income items. The line 9 is the gross amount of farm income. So what we're going to be dealing with basically is the records needed for details in 1A through 1C. That's the sale of purchased livestock and other items purchased for resale. There could be some crops in there that we do that. So we've got to separate the eligible crops from the livestock. Then we do the same thing for line 2. Separate the eligible crops from livestock and grazing crops, that income, so it's reported correctly. Then we're looking at line 3A and B, which is co-op distributions. And you'll notice that 3A is the total amount and 3B is the taxable amount. And there's often some discrepancy. Sometimes those numbers aren't the same. If you're looking at co-op distributions, the reason that may be different is if the co-op that you work with provides patronage dividends payable to you for items that are non-farm, or if there's items that are related to livestock, you'll need to pull those out so that the total amount and the taxable amount will and often are different. The same thing with 4A, ag program payments. So government program payments, report on 4A, the amount that's included on the IRS form, the total is on 4A. You have to make adjustments for your records to get the taxable amount on 4B. There's sometimes what could happen there is disaster payments could make that different. So again, you're going to look at your records to make sure that if a disaster payment is made and you elect to defer part of that income into the following year or future years, then we need to make that adjustment. So the taxable amount will change there. 5A through 5C, Commodity Credit Corporation loans. Depending upon the election, depending upon what you do, the amount that's reported on 1099 will be different than what is taxable. So you're going to make adjustments there. So if you get a CCC loan, you treat it as a loan versus income. That's one thing. Or if you forfeit the loan or forfeit the commodity and payment of the loan. So again, look through those. They're there. Further discussion, further record evaluation is needed. Crop insurance, same thing. Sometimes our crops, depending upon how we operate our farm, we can defer part of the crop insurance to the following year, especially if that majority of the crop is sold in the following year, not the year of production. So the amount that would show up in 6A would be the total. The amount that we would defer would be taken out. So the taxable amount would show up in line 6B. The amount deferred would then go to the following year. So you're looking at, again, those items in lines 3 through 6, A's, B's, C's, and those. You'll have to make adjustments depending upon how you operate your farm and how things are reported to you from those various organizations, co-op, USDA, CCC, etc. Custom hire income, not used. It's not related to the crops. We take that back out. We'd have to go then to looking at line 8. And we'll go through some better examples of what's in here. But what we want to really point out too is you're looking at crop type items. And if we have hedging that we do, those hedging transactions could be a gain or loss, depending upon how the hedge reacts or how prices react. And that information is reported on line 8. When we get into the Will Farmer example, I think this will be much clearer to you. But basically what you've got to look at is all those items, we're dealing just with lines 1A through 8, and we have to make adjustments to those various lines for those items that are not includable for the ERP 2022 application. Next slide, sir.
JC, I just want to jump in just a moment and just make a fine point. I'm going to use agricultural payments on line 4. The reason that we report the full value that is received by the 1099-G is so that when IRS does a matching to the return, they're going to see that, yes, indeed, the full value of the 1099-G, let's say it's $50,000, was reported on line 4A. But as JC mentioned, there may have been a disaster payment that was elected to be paid in a subsequent year. Let's say that that was $20,000. So then the taxable amount in the current year would only be $30,000. So we'd have $30,000 on 4B. And I think it's just important because some of the listeners may say, well, why do I want to do this? You want to make sure that the information that IRS receives, because they're going to get a copy available of the 1099-G, that amount is going to be reported on the tax return.
Thank you. Now we're going to get into the application itself. And on these next few slides, we've basically taken snapshots, pictures of, how you want to call it, of the 524, the various pages. Keep in mind, what we're going to be discussing here is how these things work. We're going to be focusing on the forms and some of the discussion that's in the instructions in these next few slides. Next, sir. So we have the 524 page 2. What we're looking at is here, where does information come from? So you know, when you look at how this is put together, if you use the ERP 2022 tool that's on the website, this thing is generated and created pretty much from that. But you'll want to review when you get to the point of filing the application that you point out or make sure that you have the appropriate benchmark year marked. We're going to be using, it says 2018 or 19. You can have your choice of either one. You'll want to include the benchmark year revenue. Then the representative tax year, you can use 2022 or 2023. Right now, we're just now beginning to wrap up some of the 2023 filings for farmers. March 1 was the deadline there. Some of that information is available. If you're not a full true farmer that can use the March 1 deadline, April 15th is the next. So the 2023 tax year, you're going to be waiting till you get your tax return done and filed, and then we'll go from there. So that's the disaster year revenue from that. Then we have to look at line or boxes 14 and 15, looking at the percent of the expected from the specialty crops other. Those two numbers need to add up to 100%. You may only have one or the other, but if you have a little bit of both, it must equal 100. The next item is 16, looking at the crops. If everything, and you check the box yes, that you have everything covered by either crop insurance or NAP, then you use a factor of 90% to determine the amount of our payment. If that is no, then it's a factor of 70% is used. So it behooves you to have used crop insurance plus NAP coverage to its best benefit. So if you're looking at those two items, it really comes from the fact sheet, discussions there on page 5 of the fact sheet itself. So again, remember IRS farm income that we use in this and USDA farm income is going to be a little different. So you're using the Schedule F and also records to make sure that this is filled out correctly. Next slide, sir. So we move to page 3. On page 3, it gives us 2 columns here. And keep in mind, the items in the left-hand column are those that are includable. The items in the right-hand column are the excludable items. So what you want to make sure of is you go through this correctly. And I believe that we've got highlighted in one of these is strawberries into jam. As an example, making sure that you understand, yes, this would be farm income if it's de minimis or small enough. Items that are excluded, animals for consumption by the owner, contract grower, eggs, milk, on down the line, bees, etc., the pollinators, cannabis. So we've already been talked about what's excluded, but remember, you've got to go through this thing in some detail to determine what is includable versus what is excludable or required to be excluded. Eligible crops, talked about there. More detail, depending upon if it's a nursery operation, could kick those out to be in the excluded side. So you've really, again, looking at what all the pieces are, you've got to really consider what all the farmer is doing. Next slide, sir. There we go, the 2 highlights that we talked about. Next one, there we go, the sales of eligible crops. Those are the main pieces to think about. Page 4. We get into some discussion here, and if you'll notice, we've got benefits for eligible crops listed there. These are ag programs, the programs that are allowed to be included. So payments that you received from ARC, the biomass, some of the on-farm storage loss programs, emergency assistance for various things, ELAP, etc. Those are allowed for being included. ERP phase 1 and 2 payments. On the right-hand side, go through those and remember you're going to have to do some subtracting. So again, your records are going to be needed. You've got to pull out the Pandemic Livestock Indemnity Program, Smart Market Hog Pandemic Program. Those items are removed, clear down to where we get into the dairy margin coverage and marketing assistance loans. So again, certain things are included, listed on the left-hand side, right-hand side, excludable. Next slide, sir. This is the bottom half of page 4. Couldn't get it all in one. Again, now, if you look at what's highlighted there, the non-insurance crops, those are includable. Make sure that you do get them in there. Items on the right-hand side, disaster program and payments, following programs are excludable. So again, ELP, emergency livestock programs, milk loss, etc. Next slide, sir. So on page 5, we've got highlighted here the net gain from hedging. Again, your records are going to need to be shown there. You're going to need to separate, make sure we've got livestock hedges out of crop hedge situations, but it's allowed. And again, remember, well, like I said, we'll talk about when we get into the example of why that could be negative and why it can be positive. So it could be income or actually a loss. There's other programs and other payments that are excluded on the right-hand side, fuel tax credits, certificate exchanges, custom hire income, etc. Those are not allowed. And remember on the left-hand side, it talks about ERP2, selected 22 representative revenue year only. We are using the actual tax year. So those are some things you've got to look at. Those are includable. So the values of production, 2022, we selected 2023 for our example. So some things to think about and how you're going to look at, again, those two items we've highlighted here. Next slide, sir. So here we have the 524A, and we want to point out some things here that did change from the earlier ERP programs for our benchmark year. Now this first one slide is for the benchmark. So if you look at items 7, 8, and 9, those are the big things that did change from the earlier application for ERP programs. You'll want to make sure you evaluate those, include those this time. Next slide, sir. On down the page a ways, we get into item 15. That's the eligible hedging gain loss, again, for eligible crops. That's what we want to make sure we have. Item 3 at the top, we've got to remember to remove income from livestock and crops from grazing, those animals on. So those are the two big things in that page that we really need to remember that we have to make adjustments for on the Schedule F. There's other things to remember, but those two really jump out real fast.
JC, this, and for the folks that are online, this is a screenshot of the supplemental document that JC and I created for this presentation, as well as to help folks. You can see that we have in the middle column, section A, benchmark year, and then it refers to where you would get the primary source for that information. And then over in the right-hand side would be the secondary source for making sure to report all eligible crop income.
Thank you, sir. And again, back to the disaster or the actual 524A, the page 2. Now we're now removed from the benchmark year to the disaster year. So the item numbers have changed, but basically all the lines are the same. 21, 22, and 23 are those that have changed from the prior year, the prior applications. Again, make note that you're going to want to make those adjustments accordingly. Next slide, sir. And here again, from our supplemental document that we put together, what those adjustments are made or need to be made for the disaster year. Again, we've kind of pointed out with the arrows there, the livestock, crops for grazing, and the hedging example. But again, this is just like the prior piece on the supplemental document. This is all trying to lay out a discussion of where to find things for those various line items. Next, sir. Now the 524 page 3, we did not necessarily use this, or we didn't use this. It was our determination that we would basically just go back to Will Farmer. And since there's these adjustments would be made, we just want to point out that you're looking at yield-based crops that have to be adjusted. Eligible sales from value added would need to be included here, and inventory crops. Again, we did not use this for Will Farmer. We simply used the Schedule F to work this through. Next slide, sir. And the same thing with here, section D. These are for the deputy administrator approved crops. And you're looking here again for the crops that apply under the first set, items 47 and items 52. So those would be the benchmark years and disaster years. And really the highlight of this is when you get down to section E, where we have the totals, that would be the totals that would apply to the benchmark year revenue and the total that would apply to the disaster year revenue. Those are the two numbers that are of major players. Next slide, sir. Here is the 510. Again, in our example, we will talk about this. This is used to apply for the waiver of the payment limitation, that $125,000. Remember to be aware of government payments greater than this. This form is used to request the waiver. The producer must request a waiver in that limitation. The income values must be certified by either a certified public accountant or an attorney. This is by statute. This can be kind of problematic in certain rural areas of our nation. We have farm tax preparers that are not necessarily, they don't have to be a CPA or attorney that's completing the return for the farmer, but the farmer has to have a CPA or attorney look at that return, look at that information and verify it. So depending upon where you're at in the country, you may be quite a ways from your nearest CPA or tax attorney to do this. So with that, next slide, sir. I'm going to cease my discussion, turn it over to Guido. He's going to go through the example and explain in detail with numbers the things that I covered in the first half of the material. So thank you. Guido, your turn.
All right, thank you, JC. Hello, everybody. So as JC said, we're going to look at Will Farmer, and he's going to apply for an ERP 2022 opportunity for this disaster payment, and he's going to use track 2, and we're going to use the tax year model. Now, what we're doing is, because he's already filed his 2023 tax return as of March 1, we're going to use that as the disaster year. As JC mentioned, we could look at 2022 or 2023, what's going to be the best opportunity. And we're also looking at 2019 as being his benchmark year. We have that choice of 2018 or 2019. But so that kind of sets the stage. Will does operate a traditional diversified crop and livestock farm in the Central Plains of the United States. And it's kind of a broad, we realize that folks may have different types of operations, but I hope that with JC's discussion and as we go through this application, you'll be able to see, yeah, this is where I would work through and how it might apply to my specific set of facts and circumstances. So here's Will's Schedule F. This is for 2019. So obviously that tax return has been filed 4 years ago. We're just finishing up, or we are in the process of filing the 2023 tax returns. And as JC mentioned, and as we go through, we're really only interested in on the revenue side. So we're basically going to start on part 1, which you can see on the screen is the farm income. And we're going to focus again on the cash method here. And I'll have one slide towards the end of my comments that'll just look at if one uses the accrual method. So we see here a series of numbers that have been applied and were reported in 2019. He's got some livestock and other resale items, and we'll discuss those. He's got some raised items in line 2. He's got some cooperative distributions because he markets a lot of his crop through a cooperative that does a lot of sales for him. So he has that reporting. He's got some government payments. And here you'll notice that on line 4A, we have 65,200, but then we have over on 4B, 60,200. So here's a $5,000 discrepancy. And in this particular case, it's a number that's being pushed forward into 2020. So for this particular year, for matching purposes, as I mentioned earlier, we're going to report the gross amount on the 1099-G of 65,200. And then we're going to have over on line 4B, the 60,000 that we're going to report for taxable purposes. So when IRS looks at this particular return, they'll say, aha, he has reported the $65,200 in full, but then has made an election and only $60,000 is going to be taxable. Over on 5A, we see there that we are making the election to tax a CCC loan as if it were taxable income. So we see the number $100,000 showing up on line 4A, and that's under Code Section 77 that farmers have that opportunity. The crop insurance is going to be the same number in this particular case. And then we see that there was a little bit of custom work done, 12,900. That's going to be excludable income. And then we're going to have to kind of sort through and see what the other income is going to be ultimately as we report and then fill out our application for ERP 2022. But this is just, again, just a snapshot of Will's 2019 Schedule F. This is going to be the benchmark year. So looking at 2018, 2019, 2019 was a better year. It's not necessarily that we're trying to game the system, but it is an option. And so farmers would want to look at the two different years and see which one would be more advantageous, ultimately looking for disaster payments. And in this case, Will is choosing, as we said, 2019. Now, again, just to reiterate some of what JC mentioned, we're going to look at Schedule F for those various line numbers, which I just kind of went through briefly. We're going to have to look at line 2, and we're going to have to make some adjustments there because we could have both some raised livestock and some crop income. We're going to use our farm record system that separates the crops from the livestock enterprises. We may likewise have to separate the purchase for resale items that we see on lines 1A, 1B, and 1C for livestock versus crops. Again, those eligible crops that are going to be available for us to report as income. And as JC went through, we'll look at pages 3 through 5 of the FSA 524 appendix, which then provides us the guidance to say, okay, what income is going to be eligible? That was the left-hand columns of those 3 slides. And then what income is going to be removed or excludable? And we have to do that. We also want to make sure that we review our records to determine if there are other incomes that could be included, such as value added. And then just as a note, and JC's already mentioned it, that we do have farm income being reported on IRS Form 4797, which is the sale of business assets. We just want to be clear about that. However, for the application process for ERP 2022, Form 4797 is not going to be used. So here is looking at the worksheet. This is going to be FSA Form 524-A, and this is Section A, and we're going to look at items 3 through 16. And so you see here, this is Will Farmer. Now I have highlighted here again that we're going to look at the allowable gross revenue items, and we are making the election that it's 2019. And so we look at item number 3, that's that first line. You see the allowable gross revenue from eligible crops. And we've looked at the records. We've made sure we separated out the livestock. And so here we have $111,800 that's going to be allowed. Then you look at other eligible crops that may be added through post-marketing. And again, the strawberries made into jam. And we have this at $4,500 on this particular farm example. There isn't anything from a horticultural standpoint that would be item number 5. Remember, Will is doing he's a traditional or a very familiar type of operation using livestock and commodity crops. And he's not into any aquatic species. So we would have zeros for item 5 and item 6. And then we look at federal crop insurance. Remember, JC had mentioned that we've got items 7, 8, and 9 that we want to split out. Now on Schedule F, we're going to have crop insurance, but on this application, we've got 3 different lines. So here we've got the allowable gross revenue from federal crop proceeds, and that's $10,100, as you can see in the right-hand side. As we now move through that, we move into item 8, which is NAP payments. So here we had $5,000 from NAP payments in this particular example. And then also Will had a little bit of private crop insurance as well, and there's $4,000. So if we add those 2 together, that's going to, those 3 together, we're going to have a little over $19,000. And that was the gross value that we saw reported as crop insurance proceeds on his 2019 Schedule F. But for the purposes of this application, we needed to sort out where did that income come from. Our item 10 is looking at the government payments, and here we see 55,200 is being reported for item 10 from these various different items that are listed here. Do note that ERP phase 1 and ERP phase 2 payments are going to be includable in this particular calculation. Then you look at any revenue from total benefits through FSA, through grants from the Department of Commerce, from NOAA, or any other state program. So this could be coming from other governmental type agencies that might be coming from FSA, but it could also come from a state Department of Agriculture. There could be some grant that might be eligible and includable. We're just illustrating here that we have $5,000. And then, as I mentioned, he does sell through a cooperative, and they do have that eligible sale. It comes back as a per unit allocation, and that's why we have the $222,900 that's being represented here, as you can see on the right-hand side of the slide for item number 12. Then we've got CCC loans that were reported under election. We've got 25,000 in this particular case. Then we have gross revenue from CCC loans that were elected in a prior year. We have $100,000. All of that's coming from records and from the Schedule F. And then you see the amount entered that's directly, and this is going to be line 8. And what we have here is a negative $1,500. And now you might be saying, well, Guido, you're talking about revenue. How can you have a negative number on revenue? Well, this is not necessarily a net gain from hedging, but this is the premium that was paid for a hedging position. The market moved against the position, meaning that it was bought, the hedge, if you want to think about it as an insurance, it was bought to set a floor on price. The market moved in favor for the farmer, and so he just let that hedge position expire. Thus, we had this $1,500 that was an expense, if you will, but the reporting rules per IRS for Schedule F require us to report that as a negative amount. So if we've done the math correctly all the way through, and we see that in this particular case, for all eligible crops for ERP 2022, that our total benchmark year's revenue is $542,000. And so we've got that from the 2019 Schedule F. We've got it from also the supplemental information coming from Farm Records. We would also have some tie downs with 1099-Gs for government payments, 1099 miscellaneous for crop insurance payments. We would also have other documentation relative to loans that might have been through CCC. And we've got those things tying maybe 1 year moving forward, such as you see item number 14 that would go forward. So we've done that, we've looked at that, and now we drop to section E, which and look at item number 57, which now we're just transposing. So basically here we've got item number 16. So we take item number 16 in the worksheet and we bring it down to item number 57 at the same number as and following through there. Item number 16, 18, 19, and then you might want to subtract anything if there's anything there from item number 45. And as you will see in just a minute, we did not use those items. So we're set with 542,000 as our benchmark revenue. So that's our benchmark. That was our better year. Now we have a disaster year. And that disaster year, we're going to use section B. So we've just completed section A. And again, this is just a repeat. We got to sort through the records. We got to sort through, make sure that we pull out and we only report the eligible crop income for the disaster year. So here we have our our disaster year. This is the section B. Again, this is for real farmer. And note that I've got highlighted that we made the election for 2023. So this program does provide flexibility. So we've got a representative benchmark year of either 2018 or 2019. Now we're looking at the disaster year, 2022 or 2023. I think earlier there was a question that I saw pop up in the Q&A, and that was, hey, does flooding in 2022 count? Certainly it does, but you would want to elect to use 2022 then as your disaster year in that particular case. And as we saw discussed in the first part of the presentation by FSA personnel in Sydney, discussed that. But here we're electing that and just illustrating in this example that we've used 2023 values. And so we want to look at that value as we see. And so you can see that on line 17, so it's going to be, as JC mentioned, item 17 all the way through the bottom are going to be, the descriptors are going to be exactly the same as what we saw before, but the item numbers are different because this is going to be section B. We have 61,500. We've got for item 18 in this particular case, we've got $4,000. And now we've don't anticipate anything in 19 and 20 as we did previously. We now have allowable gross revenue from crop insurance, and see, hey, here 21, 22, and 23 are higher numbers because we had a disaster year. And so we did get some crop insurance that came through and it was much higher. You know, we might remember that that was $19,000 in the previous example. And here we're already reporting, as you can see, almost $60,000 for these insurance proceeds. Now we keep going through, and again, just filling those items in. We've sorted those out. So item 23 is looking at those from government payments. And again, we might think that, well, we got a disaster year, there might be some ad hoc, and we've had some ERP phase 1 or phase 2 payments. We've got 53,000 coming in. We've got $5,000 grant. This might be a continuing grant that came through as a sort. Now our co-op distributions are down 123,000, basically $100,000 down. Well, that makes sense because we've got a disaster year. We didn't raise as much, so we didn't sell as much. We could have some loans eligible, $40,000. We didn't go under loan, so we're answering, as you can see there, 0. And now you get down to item number 29. So in the previous, when we looked at the benchmark year, we had a minus $1,500. Here, what we're illustrating in this particular example on this one is that we did set a hedge position, and the market went against us in that hedge, and we go ahead, and the hedge was a safe one. We ended up making $3,000 on the hedge, and we extra. So now here we have a positive number in this particular example. So just wanting to illustrate, you could have a negative number in line on either of these lines, line 15 or line 29. Now we look at the total disaster year revenue. This is item number 30. And so we add all of those numbers that we've just gone through, and we come up with $359,500. So obviously we're down quite a bit. And so 2023 in this particular example is going to be fit. And so here we've got those numbers for the benchmark year. You see, we've already filled out line 57. That's the total benchmark year revenue of $542,000. Now we're looking at the total disaster year, which we've just finished going through, and that's our $359,000. So call it almost $360,000. So you can see we've got a significant change in income. Thus, we're going to, and this is why we're applying for the ERP 2022 benefits as we move through. So hopefully you'll see Schedule F is useful, but you got to get other information. And now we've determined what that revenue is by using the worksheet, which I've just illustrated. Now we're going to transfer those numbers ultimately to the actual application. As I said earlier, we did not use section C for any adjusted eligible yield-based crops or sales from value added through post-production activities that might be coming from a Schedule C, or any eligible inventory crops in this particular case. Likewise, we did not use in this example any crop value for deputy administrator approved crops, as you can see here, for items 47, 48, 49, 50, and then the total 51, and likewise for those that were not sold in the disaster year, as you can see there. So our example was just to go through. We feel, based on our experience, there are going to be some people that might take advantage of this, but we hope that for the illustrative purpose that you can see why we chose to do this. Okay, so we've completed the worksheet, and now we're going to transfer all of this to the 524. And as JC mentioned, if you use the tool will work you through the worksheet. And then also, as you're working through the worksheet, it will then calculate and do the 524. This is what the 524 should look like in this particular example. So we got Will Farmer, we've got his address, he has a phone number, all that detailed information. Most of that FSA office is going to have. But now really what we want to see is we're going to go look at Part C. So this is the disaster year revenue certification for the ERP 2022 program. Notice that we have the 2019 benchmark year box checked or X'd in this particular case. That's in item number 10. Then in item number 11, we see the benchmark year revenue. And again, this is transferring from the worksheet into this box 11. That's a 542,000. Then we have the election of the representative year, or the disaster year, and that's going to be 2023 in this particular case. And just note that it's flexible. We could have done 2018 and 2023, or we could have done 2019 and 2022. But for this particular example, 2019 was the benchmark year. 2023 was the representative disaster year. The disaster revenue year, that's that 359,500 that we calculated. So that number transfers over. Now we got to look at box 14 and 15. And in JC's presentation just a few minutes ago, as we went through this, remember, we've got to have that revenue between these two boxes have to equal 100%. In this case, we don't have any specialty or high value crops because we got a traditional livestock and crop farm, as you would see very commonly in the Midwestern area. And so we have 100% listed in box 15. And then we go to box 16. And here, were all the eligible crops insured or covered by NAP? And here, in this case, we've answered yes. Will did purchase and insured his crop for these years. Over on the left-hand side, we've got a little text box set, and JC mentioned this in his presentation, but just as a reminder, if all of the crops are insured or were NAP covered, then we're going to use a 90% factor of the benchmark revenue. If not, then those it's going to drop to a 70% factor. So again, part of the rules of the game, and this is why answering 16 is important, and hopefully those crops were insured, and thus you could check the box yes, and in checking the box yes, then you have a 90% factor of the benchmark revenue that's going to be available to you. Then over there on box 17, 18, 19, 20, et cetera, those are for the county office to use. The the applicant is not going to fill those out. Box 22A, obviously down at the bottom, we'd have Will Farmer sign it. What's his relationship? He's the producer or the owner, and then he's going to date it. And then box E, again, is going to be for the county office to make their determination. Yes, was it approved or was it disapproved, etc. So essentially, we've gone through the worksheet. We've calculated the benchmark year revenue, 542,000. We've also then calculated disaster year revenue. We've used a tax basis method. We've looked at the information coming from 2 different years of tax returns. And for that disaster year revenue, as we can see there and we discussed, it's $359,500. So that was based all on whether we were using the cash method and using Schedule F. And over 98%, as mentioned earlier in the presentation, 98% of farmers do use the cash method. However, if you do use or if you're a farmer that uses the accrual, you would use Part 3 for farm income. And here's just a little bit of a screenshot to show where those numbers would relate to in that presentation. If you look at line number 37, it says sales of livestock, produce, grains, and other products. That's going to be analogous to line 2. Co-op distributions, line 3A, 3 and 3B. I'm not going to bore you with my reading skills, but what we've tried to do here is produce a little bit of a roadmap that if there is an accrual basis taxpayer that wants to apply, where do they find their information? And they're going to have to go to Part 3. And then here, based on the information, how we want to do it. And ultimately, why are we doing this? We want to separate the eligible grain crops from the livestock and those items. And so that's what we're trying to do. And you can see here, particularly on lines 45 through 49, this is going to be an inventory, or if you're familiar with cost of goods sold calculation, this is going to be for those purposes. But ultimately, we're going to have a goal that's eligible grain crops only, or eligible crops only, because we could have some aquaculture type of activity coming in there too. So just a real quick review of the application. We've got Schedule F and our farm records. Our job's to separate those eligible revenue sources from the livestock. Do we have any de minimis value added that's coming in? And that we want to use 524A instructions for filling that out. And as JC mentioned, and as there is a useful ERP 2022 tool that's a spreadsheet that you just go through, and it does all the math for you, but the process is exactly what we've just illustrated using the forms. We'll post the allowable entries from Schedule F and other supporting documents. We'll do that into the worksheet on 524A. Then we transfer those appropriate entry values. Ultimately, the benchmark revenue and the representative year, the disaster year revenue from 524A goes to FSA 524. We're then going to sign and date and then submit that to the FSA office. If our government payments do exceed $125,000, as has been discussed previously by the previous 2 individuals, then one could file a 510 waiver. This income does have to be certified by either a CPA or an attorney, and this is required by statute, not by USDA policy. And as JC mentioned, in rural areas, this certification process could be problematic in finding that individual. In our Will Farmer example, the 510 was not needed because we did not reach that particular threshold. As mentioned, there are some really good ERP 22 resources. We provide those here. The broad ERP 22 emergency relief website is the first link. Then you've got the application for track 1. And as was mentioned, that's going to be pre-filled out and would have been mailed out to potential recipients. Then the application for track 2. So this needs an affirmative action by the producer. They have to decide, yes, I'm going to do track 2, and then make the decision. Am I going to use a tax year, or am I going to use some estimated revenues? We have the track 2 revenue worksheet, which I illustrated, and that's listed there. We also have the ERP 22 tool, which we have talked about. And then lastly, the FSA 510. All of these links were tested, and they should be good, but they're also as a resource for individuals. Now, for folks that might have done their own tax returns, or they want to use somebody, the issue is finding a tax preparer that is familiar with farm taxes and how the tax law applies to the agricultural industry. There was a tax topic, how to choose a tax professional. You could find that at Utah State University, and that link is listed there. There's also a webinar looking at the introduction to ag taxes, and that does include a discussion about how to look at and how to kind of sort through and getting a tax professional. And you can see that as that link as well. More importantly, maybe, is this next major bullet, and that is what to look for in trying to find some additional expertise. What are the preparer's qualifications? One of the things that I've always kind of tried to tell people is that the baseball glove does not necessarily the baseball player make. Yes, CPAs and attorneys have credentials, and they've worked hard to obtain those credentials. But as you might know, you could be a really good melon farmer, but you have no expertise in raising chickens. And so you need to kind of sort through that and look at what they have. Broad brush, is the individual, have they been in practice for quite a while? Those kind of things. You want to ask about their experience with relative to farm, forest, ranch, and other land type of income tax returns. What are the services they provide? Do they just do tax return, or do they do any representation work? What would those fees be? Make sure that the preparer is available. Are you accepting new clients? Yes or no? How do they handle these gray areas? And we've talked about some of those. We've tried to provide as much guidance and keep us out of the ditches, but there could be areas that might not be as clear in the tax code. How do you handle those? Are you more conservative, or are you more liberal? You probably don't want anybody that says, oh, I just like it and I'll play audit roulette. That's probably not well. And then lastly is find out what limits on any audit representation. If you get selected for audit, and about 70% of audits today are what we refer to as paper audits or mail-in audits, or where they may look at 1 or 2 items on the tax return and you have to provide substantiation for all of those things. 30% are going to be in-person line-by-line audits, and that's generally been where. But find out whether that's how that is going to be handled. As JC mentioned, there are resources. The first one is on farmers.gov taxes. There are links to webinars and to other materials. In July of 2023, there was a discussion on ag taxes, what new farmers should know. That's a really good one to look at. In March of 2023, so basically a year ago, I did a Schedule F, a line-by-line discussion of what information is there, and I kind of did a very quick and dirty line-by-line discussion for today's presentation. As JC already mentioned, at ruraltax.org, we've got some tax topics, for example, how to select a tax professional, what I just mentioned, but also it's important to look at what's a farm, what's farming, and who is a farmer. And this is coming from an income tax perspective, because we might think about it, oh, I know what a farmer is, but there are 26 unique definitions within the tax code as to how a certain tax regulation or code applies. Do you meet the definition of being a farmer for this particular one? For example, do you need, are you exempt from making quarterly estimates? And the answer to that question is, for example, if 66 2/3 of your gross income comes from farming activities, then you're exempt, and then you have to file your return. You have the option to file your return by March 1st and then pay any and all tax due, and you don't have to do quarterly estimates. JC already mentioned that land-grant universities through their extension programs have good programs. And there's also agftap.org is another nonprofit organization that helps folks with some of these questions. As folks may, and we're looking at and we're winding up, if there are any follow-up questions to this, then Janet Wright, who is on this particular call and was the first person to introduce, it would be the initial contact, and then she can sort out those questions. And there's her email address, as you can see there on the screen. And that gets us to the conclusion. We thank you for your attention today. And Janet, I'm going to stop sharing my screen, and we'll be open for any questions if there are any.
Okay, thank you so much, Guido and JC, for your expertise in going through this from the tax side. And thank you, Sydney, Aaron, and Melanie, for looking at it from the actual program side and the questions that they flagged and answered in the Q&A. And so right now, if anybody has any, we have a few minutes. Does anybody have any questions right now for Guido or JC that they would like to plug in right quickly? And while we're watching that, I want to just flag for everyone that this, and if you have a question, please put it in the Q&A box, and they're watching it now and they will answer live. While we're waiting to see if anybody puts anything in the Q&A, I want to flag for you that this session is being recorded. The recording should be available in about 2 weeks. And the slide decks that were shown today will be sent out via email next week. The ERP team is going to try to pull together the questions and clean it up and make a FAQ document, and we'll try to have that about the same time as the recording is ready. A question popped up, so Guido, I'm going to let Guido or JC or the ERP team, I'm not sure who's it's for, but I'm going to pop off and let you guys feel that.
It looks like the two questions, they're being answered by the ERP team because they are within that kind of scenario. So I'm going to let them go.
Okay, I see a question about if you didn't receive your 1099 from USDA. And if you have not received that yet, if you go to farmers.gov/taxes, there's an 800 number there, or you can contact your local FSA office and they will be able to get that for you. Okay, as I'm scrolling through. So Guido, JC, do you guys see anything that you can grab right quickly before we shut down?
I'm not sure about, there's a question here about another webinar to cover the expected revenue option. I would think that if there would be one, that's going to be more in the FSA team's wheelhouse, how that would work. I don't see JC or I doing that. That would be more in your, the ERP team.
Okay, and yes, and as the webinars are announced, they are placed on farmers.gov/taxes, and those invitations are also sent out via email, and we have them monthly, and as the topic is chosen and advertised, you will see what those are. If you have any requests for any webinars, you can send that to me at janet.wright@usda.gov, and I will work with the teams to see if we can get something scheduled on that. And so it looks like most of the questions left is for the for the ERP team. So with that, I think we're going to shut down. If your question has not been answered yet, we will follow up with those answers. And so if they haven't been gotten to yet, they will be gotten to. And thank you, team, for being with us today. Thank everyone for joining us, and please have a wonderful day.
Thank you and
Thank
goodbye.
you for inviting us.